Good afternoon, everybody, and welcome to this edition of Live Market Analysis Macro Style. That means we'll be covering indices, commodities, foreign exchange, and crypto. My name's Carl Kaplan. I'm the market analyst over here at ThinkMarkets, and it's a pleasure to join you as we have a look at the big picture, think about what might impact you on a micro level that is in your portfolio. Pretty simple format today. Head over to the Q&A window somewhere on your Zoom session, or if you're watching me streaming via YouTube, LinkedIn, Facebook, and Twitter, there's a way to get through to me as well. I've got it all happening over here on my left-hand side. Let us head over to the charts, and we will go to a question coming in from Craig firstly, and that is to do with Newcastle coal. And if you're holding any of those local coal shares, that is New Hope, Whitehaven, Terracom, Yancoal, and a few others, certainly a chart you need to be aware of. What I might actually do is head over here, because this is the best place for me to show it to you, and head over to my futures watch list and click down to NCF, Newcastle Coal Futures, 2 for second month, or the current month, then front month is the way to put it. And this is what we're looking at here on screen. It is a bit sketchy. It's not the most liquid of contracts. And I might just zoom out a little bit first, get a bit of a bigger picture view of where it's come from. You can see that if we go back not that long ago, post-COVID, coal prices are around about $50 a ton. And then if we go a little bit further back, maybe let's go pre-COVID. What was the pre-COVID norm? And it's probably a quick way to do this, isn't there? Let's go to the weekly chart, and that way we can have a look at it all together. There we go. And, you know, it does highlight the value in doing or using weekly charts. And I did a session on AusBiz yesterday with Kyle on the trade. You can check that one out where I talk about weekly charts and how to use them. But it does give us a big picture view. And I would say, you know, a really good price for coal is about $135 a ton, and probably a pretty average price might be closer to 100. And then we zoom in and we get to where we are right now. And let's just stay with the weekly chart just for a second, because I think it is instructive. And my trend ribbons work the same on weekly charts as they do daily charts, but I don't suggest you use necessarily them both to make trading decisions. I say use one or the other. If you're a daily chart trader, make your decisions on the daily chart. I don't mind you looking at the weekly chart to get that big picture view. That's fine. It's just zooming out. But make your decisions on the daily chart. If you're a weekly chart trader, just make your decisions based upon the weekly chart. And daily chart traders, you check the market once a day after the market's closed. Do your analysis, make your decisions. Weekly chart traders have the luxury, and this is the beauty of weekly charts, of checking the charts once a week, probably sometime on the weekend, because you do want the market to be closed. You can make an unemotional yet informed decision. And again, you're doing 1/5 of the work. So plenty of value in that. And let's just look at this chart purely on the weekly basis, and then we'll go have a look at it on the daily basis. So strictly for weekly traders, you would be saying, well, this week's not finished yet, so that last candle is still live. It's only Thursday, and we've still got another couple of contributions to that candle. But on the basis of what we can see, and on the basis of this little turnaround here, we are seeing some demand come in around that 175-ish level. Not really that surprising, given we did see some demand in and around that zone in the past. There's clearly some sort of, you know, bigger investors looking at that area as a value zone. I'm concerned, however, that we might be losing the battle a little, putting this week's strong performance aside. It would be interesting to see if we can take out that high there at 212, 213. And if we could, then yes, potentially we are actually building a similar pattern to what we saw back around November, December 2021. Okay, so this is the key level for me, 20, whatever that is, call it 13. I can tell you exactly if I press the right button, that high there, 2012. Okay, until then, I don't think you want to get too bullish on this thing. The evidence suggests the short-term trend, again on the weekly chart, is down, and the problem for the long-term trend is that we are really breaking through this long-term trend zone. And if anything, the evidence so far suggests that it is an area now of supply, not demand. And I've given you a point where it becomes bullish. The point where it becomes bearish, that low there, 174, let's call it 174, close beneath that. And I do think coal is in big trouble, as in coming back down, probably closer to $100, big trouble, getting back maybe towards that long-term average. Let us then very quickly see if anything, if there's anything in here to dissuade us from that analysis on the daily chart, and there isn't. Quite clearly, 212 is a key level to the upside, 174 is a key level to the downside, no surprise. But we are seeing a far more bearish indication here in the long and short-term trends. Okay, so I know this is silly, buy, hold, sell, because you can't even trade this contract even if you wanted to. But I would go hold just on the basis that 174 appears to be holding. I could become more bullish on it if it closes above 212, but I'm very much still in the bear camp here, because a close below 174 could see us, remember, 130-ish into 100. That range is a more typical price for coal based upon long term. Okay, can we look at the gold chart from Colin? Yes, we can. I'm going to head back here because it is in this platform that I have all of my scratchings, which is here. That's the New Zealand dollar. I'd like to talk about the New Zealand dollar a little later on, but let us first head over to gold, which has had a little bit of a tough time the last few sessions. I mean, last time we looked at it, I reckon probably, in fact, it was literally on that day. I mean, that's what we were looking at last time. And in fact, it might have been here. It might have been here because we wouldn't have had the 13th candle yet. It would have been here. So we're looking at this and thinking, look, great trend, unimpeded really up to that point. No major signs of supply. So happy to back that trend, understanding also that we're not that far away from some pretty important levels there at 2070, and then this one up here is 2072, if I'm not mistaken, 2072.5. Okay, so understanding that we're nearing a supply zone. At that point, the supply hadn't manifested itself, and then it did. That there is the manifestation of supply. We'll look at the US dollar index shortly, because that'll give us some insight into why the gold's having a bit of a tougher time. Okay, so there's supply. Finally, we reached it. That's not a bad thing. We want to see how the market responds to that supply. Does it build? Does it get worse and worse? Or do we find demand coming back in to support price? And I think that's the scenario we're at the moment. So I'm happy to maintain my overall bullish bias on gold. I don't think we need to change that at this stage. I think that shadow there, the lower shadow I'm talking about, is important. It is in a demand zone that we're expecting to hold around 1980. And then last night's candle, I think, is particularly instructive, giving us another reach down into that zone. Really, for much of the session, I suggested last night, quite convincingly beneath that zone, at a point where, don't forget, this was quite a large black candle at one stage. People who are trading on intraday signals might well have been inclined to exit their long positions on gold, or even take up short positions at one stage. Think about that candle was a black candle. It was candle. Now, that's not going to light up for you, but I can do something even more clever, or cleverer, if that's a word. Do that. And it's getting close. Maybe it's on my Zoom, of course. There we go. So we're looking at something that resembled more, well, actually halfway between candle 1 and candle 2 last night. But we finished with this big long lower shadow. So the demand did come in at a point we're expecting it to appear. Okay. So happy to go hold here. Would I add risk to gold? Would I run out and buy the spot gold contract, which you can trade with us on the ThinkMarkets platform? I don't think so. That one candle is not enough. If it was a big white candle, if that body finished white, I'd be a little bit more confident. If it finished above, say, that shadow point there, which is 2015, I actually would have just said, just go buy it, plus 1/3. So it is very close. If we were to see a candle like 3 pop in tonight, and look, it doesn't have to be particularly huge, but anything that gets us above, as I said, above 215, then I'd be really happy with it, and I would then go plus 1/3. And a few ways, obviously, you can slice and dice this opportunity, and that is to do what most investors do. They go, okay, well, I've got to go buy some gold stocks. So I head over here and I type in Newcastle and see if I need to buy that, or Star, or Romelius or Resolute. And you probably want me to do some analysis on those, but I only do that on Tuesdays, everyone. Or if you're in America, you might type in something like Newmont, who's looking to acquire Newcrest, or gold, which is Barrick Gold. Those are the two biggest gold producers in the world. But I think you should also consider potentially doing something like this, which is heading to our Think Trader platform, which has gone all blank for some reason all of a sudden. Let me click that and it'll make it work again. Might have to log in again, but it helps me demonstrate just how easy, oh, there it is, just how easy it is to use. And I might just go, I can go gold if I want to, and I'll get some options, and I can trade Barrick Gold right there. Isn't that amazing? Goldfields, Golden Road, anything with gold. But then I get down to here, XAUUSD, XAU, X standing for spot, AU standing for gold. Obviously, that's the chemical symbol for gold, and versus the US dollar. And there it is there. And if I want to place a trade, I can either trade at market using these buttons, or I can pop that out. I won't do that, so that's a bit more complicated. It's telling me I have insufficient money because what I've done, it defaults me to the live account. Very frustrating, but I can switch to the demo account where I've got all the money in the world, I can assure you. And open that up again, and you can see I can set up my order. Now, just very quickly here, the smallest amount you can trade is, well, it says one contract, but that is one micro contract I'm going to suggest because it will give you a 15-cent plus or minus move in Australian dollars for each 1 cent move in the gold price. Okay, I can then set up my take profit and my stop and trade from as little as $148 on the margin. Okay, let's have a quick look while we're there, just because it's a while we're there sort of thing at silver. You probably can't really do one without the other. I think that's actually a better candle, isn't it? I mean, that was the white candle I was looking for. It's also coming in at that support zone I was hoping for, which is 2054, and where that light green zone is actually getting really close to. I like this one. I think on the strength of that candle, remember I said I'm not quite ready yet to gold. I want one more candle's confirmation. I reckon that candle's strong enough to dip a toe in the water. Now, I didn't queue up my shark video, ladies and gentlemen, but this is, you know, we're not exactly in a sort of a breakout phase or in this motive phase. Motive meaning moving, where we're sort of in here. And we're not seeing, you know, we're not really seeing any supply, right? We're trying to find it. We're trying to find that supply, right? But now we've found it. Okay, so if we were going long in here, you can add on big white candles with great confidence. But because we've found the supply, it's like, oh, there it is, all right? We are going to be cautious here, okay, adding just a third. And then if we get the confirmation candle, you might add another third. And then if we close above 2608, then you're building into your full position, okay, but not until then. So I think silver looks really good. And I know I don't want to labor on it, but I know we just did it. It's not hard then to find XAG now for silver and then do the same thing. And I'll just show you the contract specifications there. 50, it kind of doesn't matter what this is, because what you're really doing is looking at this pip cost, okay? And you're saying, well, for each one of these big numbers, and you see small number 2, small number 5, big number 1, big number 5, and it's always the final big number that represents the pip on our platform, okay? So you can say that each movement of that second big number, I make or lose 75 cents, and then decide based upon where you want to set your profit and where you want to set your stop loss, how much you want to risk. If I need a stop loss at 24.75, I'm risking $30 on the trade. Okay. Now I know I'm only risking $30, but I because of the size of the contract, I still require $187 to be able to do the trade. Let us keep moving back here and go for the next request, which is from Carlo to look at copper makes sense, doesn't it? We're looking at the favorites here. And what I might do actually is have a quick look at lithium next as well. To get copper, I need to head back here coincidentally and go here. And we're going to go back up to our futures list here and HG1. So last time we looked at it, we did the cheeky 1/3. And I reckon that was literally looking at this candle here. We said the cheeky 1/3, and then we got Thursday's candle, would have been nighttime our time. Friday flamed out, unfortunately, and then we haven't had as good a run since then. So instead of demand, instead of closing above 415 and saying that this 415 supply zone has been eliminated, the people that we felt were prepared to supply in that area have been taken out of the market, and even better, they've been given cash. And by having been given cash, they then become part of potential demand. That would be wonderful. What we found, in fact, was that actually, no, they've got plenty of ammunition and they're happy to supply in that area. So with all the talk in the world about how copper's the next big thing, yet they were still happy to supply at $4.15 a pound. Follow through the next day is not encouraging at all. This is a bit of a nothing day. And then we get the crucial candle, which is really last night's candle. I think this is a live candle here. Don't pay too much attention to it. But the lower shadow into what we're hoping will continue to act as a demand zone through here. So that low there is pretty important, 402. I don't want to see it really print beneath that, to be honest. And I certainly don't want to see it print beneath 392, which is where I believe you would exit the plus 1/3 that we have put into the system. So if I was to clone this, for example, and move it down here, I would then edit it and say that it would become minus 1/3 on a close beneath. Again, if I copy that across beneath that low there, that's how we would be looking at this one. Until then, I'm a happy holder. What could help me add to the position? Well, I think 415 is the key level. I don't think you even work on nice white candles just under here. I just don't think it's worth it. This has been stamped clearly as a point of supply. And until we close above that level, and it's actually, let's call it 420, then I think you just sit on the risk you've got. You've got enough risk. That's what the market's telling you. You've got some skin in the game. Hey, you've got enough skin in the game. If supply-demand dynamics change to get to eliminate that supply, which is so clearly in the system, to turn them from supply into demand by having that cash, that's when you start thinking about adding some more risk to this one, and not until then. So hold, not a buy. If again you are curious, all I need to do is go here, copper, high grade, and you can trade it there. Of course, you're welcome to go investigate your various copper stocks on the ASX, which coincidentally had a bit of a pop yesterday, didn't they? But I think that was more to do with OZL getting delisted than anything else. And there you go, Carlo asking for lithium as well. So let's head over now to the lithium hydroxide chart, which coincidentally is the next one down from copper on my list. And I'm going to zoom out a little bit. And we saw an update come through today showing a very sharp decline below that 50 level, which held for a few days. And there should be no surprises here. And if you were thinking the lithium price was going up, you didn't get that from me, because all I've been saying very consistently in these sessions is that the lithium price is going down. There's really no other way you can look at it. And there's your line chart there. Where could it stop? I've drawn in my other chart, which I'll go to in a second, the 37.25 zone, which is around here. Let's call it somewhere between sort of 37 and 35 as a potential point where we could see a little bit of demand and at least a pause in this decline. But ultimately, who knows where it could stop, and we won't know until it's at least starts to go sideways first. That would be the first point, or has a rally. But otherwise, the trends here are extremely bearish still. And I think that's why lithium is getting a bit belted today. If we're looking at your Aussie lithium shares, just looking at my watch list here, all down between, sort of 1.5% to even 5%. It goes down 5%, and giving up many of those last couple of days gains. So a little bit of reality setting in on the lithium commodity price front, because we had UBS come in and get people a bit stirred up, didn't they? Hoping that that was the low on lithium, proving not to be the case for the time being. I just want to show you the lithium carbonate chart, because this is ultimately where it all started. It started here, and as I have said to you many times, that because lithium hydroxide is a refined product, it tends to hold up better, because we're really talking about some of the supply bottlenecks for that refining process. But that's starting to be alleviated as well. We've got a bunch of big plants coming on, a couple of big ones locally here in WA. To alleviate that supply side problem. And really, lithium hydroxide just lagging. It's lagging lithium carbonate. And I forgot to, I should have apologized, didn't get the latest update for this one today. But I suspect, given the lithium hydroxide price, it has fallen even further. And if somebody's got it, just shout it out to me in the notes what the final price is. But I suspect probably 160,000 yuan per tonne is a possibility. And having now completely cut through this 178-ish, 170, let's say, zone, like a hot knife through butter, then 85,000 is probably the next level. You can see the long consolidation there. So for a protracted period of time, the better part of a year, well, let's call it at least six months, the market became comfortable with that area representing fair value. And therefore, I think it could well become comfortable with that area representing fair value again. That's half again from where we are. So it's hard for me to become a lithium bull. Certainly looking at some of the lithium charts during the week, I said, well, I can get back to hold now. We've been quite bearish on them during this week based upon some of the turnarounds in some of those charts. I said I could get back to a hold, but we're certainly not at a buy. And this might even put some pressure on that hold thesis. So for the lithium bulls out there, I wish I had better news. Don't shoot the messenger, hey? I'm not a lithium hater at all. You know what? I loved lithium. I loved it all the way through here. I was banging the desk and saying, hey, everyone, you need to buy lithium stocks. But when this turned, geez, I was on here very quickly. I reckon around here, go check the tapes saying that something's not right with lithium. It's time to get out. And there is a video there where I called the top. It's at least a couple of months ago. Holy dooly for me, I guess. Okay, let us keep moving here. Barry asking logarithmic, or weekly and daily. When I view daily on log, I get a view of the impact of large changes. Yes, I agree. I tend to use it. It's personal preference, Barry. There's no right or wrong. I tend to use just the good old arithmetic charts on the daily, because the price changes don't tend to be as big. Now you're going to say, hey, Carl, they can be big. I know they can be big, but it's the weekly chart where they tend to be massive and have a big impact on what you're seeing. So I use the log charts for the weeklies and I use the arithmetic for the dailies. But again, it really doesn't matter. It really doesn't matter, because when you think about the way we're using it, we're trying to find trends, we're trying to find price action, we're trying to find candles. And where the scale comes into importance is projecting the potential, okay? It's less important, I guess, in identifying the trade at the start, okay? Now, what is that one? Dare I click on that link, Perry? You're not going to, it doesn't work. I don't know what that is. I figured you were trying to raid my bank account there, Perry. Opposite to my shark thing. All right. I'll have to check that offline. It's not loading up at this point in time. I'll try again. Perry often sends me emails from Nigerian generals that just need a little bit of help in getting some money out of the country. Not the case. Okay, let's have a look at Fantom, one of my favorite cryptos. It looked like it was going to go there, didn't it, Craig? But has gotten a bit quiet. Let's go here, crypto, and let me go back to candlesticks, and let me go to FTM, which is here. Oh, gosh, there you go. Honestly, I've had a bunch of other things to do today for ThinkMarkets. I haven't even looked at my my crypto wallet. I figured it wouldn't be good when I saw the Bitcoin candle, but I'm probably not even going to look at it today, having seen that. Oh, that's annoying. As I said, we're starting to look good. Short-term trend, long-term trend had changed, I think. But no, that's going to slow us down significantly, I think. Change the screen. Sorry. There we go. Now, where did I lose you? Did I lose you? We had a discussion about lithium, and I showed you the chart. I think we're okay. So that one's for Craig. Yeah, this big black candle here, I think, is going to slow us down, unfortunately. So would I buy it? No, I certainly wouldn't buy it. Would I hold it? I'm going to hold it anyway, but I'd be concerned beneath 43. Let's have a look at some of the other ones which I own. Neo, again, this hit 14, and so quickly back to here. This is starting to look a bit messy. Check my Ethereum. Oh God, I didn't even see what happened. I haven't had a chance to even look today, everyone. So if you know what happened, let me know. Very frustrating. Okay, enough said. There's literally not going to be anything here that's worth looking at. That one's still half decent. That one's probably still okay if you've got it. Okay, that sucks. Can we have a look at the US dollar index? Yes, we can. Where am I going to do it? I'm going to do it here, and here, and scroll up and go here. So this is the daily chart of the US dollar index. We can see we do have a very clear-cut short-term downtrend. I think the long-term trend has turned. I think that's a lock now. Having broke through it here, tested it, and failed here, and then really I think we've failed here as well. So this short-term trend is in play. I can't see. I mean, yes, we've had two little pop-ups here, but I don't think it's the beginning of a rally that could do something like this or something even worse. So I'm going to say stay the course on this one and expect that we're going to see a lower US dollar at some stage in the not too distant future. And timing wise, probably less like that. I don't think that'll happen, but it's probably more sort of like that. It might take a week or two to come back and retest 182 and beneath 100. Then it's probably a bit of a slippery slope. And there's I don't think you can look at that without, in the same breath, looking at this next one I'm going to show you here, because that US dollar really trades on one thing and one thing alone, and that is the US interest rate. So obviously the higher the rate, the more attractive that US dollar is to the carry trade. That is the ability to borrow in lower yielding currencies to fund an investment in a high yielding currency. And as a big fund manager, hey, you could try this with $100 and you might make over the course of a year 2%. Okay, holy dooly. But if you did it over $100 million, okay, that's starting to add up a little bit. And it might be 3%, it might be more at the moment. Interest rate differentials are a little bit tight, but central banks are in sync at the moment. But there was a period not that long ago where, for example, the Australian rate was significantly higher than the rate in the US, and this is probably going back into the early 2010s, and you had massive carry. You're earning a few bucks a day, even just on a mini contract, so 10,000 Australian dollars or 10,000 US dollars. Where are we here? So this is why the US dollar has strengthened over the last couple of sessions. It's because rates have been heading up. We don't have many Qs this week, but I think next week we get some big data out. And until this rate situation starts to push down again, then we might see the US dollar just sort of stubbornly hang around where it is. And that has annoying implications for some of our commodities like gold, silver, and copper. To see them go up in spite of that would be very positive. The panda, yes, no, I've ThinkMarkets sites blocking me on that one there, Perry. That's the panda. I have seen the panda. I'll post it to Twitter. Okay, that's the bottom of the list, everybody. Let me see. There's nothing coming from the streamers. So what I might do is just talk about those New Zealand dollar crosses. that I mentioned before, and it's part of an article I'm writing at the moment because we've just launched in New Zealand. So if anybody's listening to me from across the ditch, we have a ThinkMarkets operation now allowing New Zealand clients to come on board and trade with us. And I don't think your currency is looking very good. I think it's looking pretty darn terrible, actually. So a couple of trades here look very interesting. These are probably the best charts I'm going to show you today, actually, is the EURNZD euro versus the New Zealand dollar. Look, I think rates are going to be higher in the Eurozone over the next 6 to 12 months. I think rates in New Zealand probably have peaked. I know that's a bit of a probably, but the economic situation in NZ is far more dire, certainly than it is in Europe, where they are really still enjoying a large amount of pent-up demand post-COVID. So there's every chance, I think, that the markets factors higher relative rates in the Eurozone, higher bond yields compared to the New Zealand dollar. We see some flow that way. I think the sterling is also well placed to appreciate, and that's a very similar chart. And you wouldn't necessarily take both of these trades because the sterling and the euro are going to move on very similar themes. Maybe there's some diversification, maybe in going short this one here, which is the New Zealand dollar versus the US dollar, which I think also, if it cracks beneath, say, 60 there, can probably fall a long way. So interesting theme to date to look out for. And then if there are no other requests coming through, I just want to finish off with a quick look at the NASDAQ because this is one chart I did look at this morning, and I still feel that we are setting up for a move higher here. I'm just seeing, you know, a number of white candles, and even when we have bad days, lower shadows. I know that one there is an exception, but otherwise I still think this is very much intact. I know last night it looked like a bad session, but there's just too many sessions where we're coming off those lows. So I think this could surprise you to the upside. I think risk on could surprise you to the upside. And yeah, I know we're just having a few sessions here where we're doubting that a little, but I think we're okay. I think even the Russell's had quite a reasonable recovery here, and the S&P 500 maybe even is the best chart of that bunch. I know the this one has popped up as well. Probably don't talk about this enough, and let me just make sure you can read the title there. Just changing something off screen so we can see that's the Shanghai Stock Exchange. But that's a big move. That's an important move as well, because, you know, this was a pretty serious area of congestion, wasn't it? Where, you know, we're really not sure what to do. And I think that's a good break. There's a little bit of supply in here for sure. And that's probably what we're seeing manifest itself in the market. But if we can clear that, and with, let's face it, a pretty chunky double bottom, you know, inverted head and shoulders here, it's just telling you this just can't go down. It just doesn't want to go down. It can't go down. And if you can't go down, then in my experience, you tend to have to go up as the money is dragged back in, kicking and screaming from high levels of cash at the moment and high levels of bonds. I did a tweet yesterday, which is really important, and I think we should go and look at it now. So let me head to my Twitter here, and we go here, buy low, sell high. Hello, that's a cool little thing there, isn't it? She hits the target. And where is this thing I'm looking for? Macroeconomics. This is the chart here. Okay, this is the one I wanted to show you. Okay, so what we're looking at here, this comes from Bank of America, and they do a regular fund manager survey. And one of the questions there was, look, you know, are you overweight stocks or bonds? And the percentage of fund managers reporting they are overweight bonds has blown out, and that's showing a negative reading here is overweight bonds over stocks. And if you're overweight stocks, you're at the top. Okay, you've got a positive reading. But what we do find is that the substantial dips that we're talking about, the V shapes, have come at major market turning points. And when I say major, I'm talking about the biggest in the last 20 years. I can tell you that I was extremely short heading into March 2003 because the trends were down and everything looked bloody awful. And by about May or June, those shorts were toasted in 2003. The 2009 one was a little bit interesting. That one sort of was less of a V shape. It sort of had a bit of a flatter bottom, so I wasn't really short for that one. It was more neutral. We're going through Carl's last 20 years worth of trading here. Honestly, I can't even remember those. This one got me quite short in China, and that was quite a V-shaped reversal as well. Go have a look at these. These are major swing lows. Even get a monthly chart and have a look at these. And of course, COVID as well. And here we are now at the second greatest discrepancy in the last 23 years, and one that is approaching the GFC levels. Now, it is possible, don't just go, oh, geez, I have to put all my money in the market, because you can see even at this last one, there was a false bottom here. Okay, so it's possible that we actually go even lower here and the discrepancy becomes even greater. But I just think we're in that zone now where you could well see a major market low. And the upshot of this, quite literally, figuratively speaking, is that when we flick to the other side, what it starts to represent now is the reversal of that overweight position in bonds. It's the selling of bonds to realize cash to invest in the stock market. Hey, we're not there yet. But once we flick back to the other side, that low is well and truly in. And the oldest saying in the book goes, look, history doesn't necessarily repeat. So just because it's happened every time in the last 23 years, that doesn't mean it has to happen again, but it sure does rhyme. It tends to show, influences and shadows and characteristics of the last and the last time before that. I think that's it for today. I haven't had any other requests, but I think that's a pretty good wrap up of the macro. As you know, it's not all we do here. If this is your only experience of the webinars, we also, that's where I'm going, we also do ASX shares on Tuesdays, where you're more than welcome to ask me about your Whitehaven coals, your Pilbara minerals, your BHPs, your Rios and your banks. But tomorrow, I think, will be a very exciting one, the USA edition, where we're going to look at the likes of Microsoft. Stock we've been very positive on. Meta, also been quite positive on that one. Nvidia has been going gangbusters. You know, some of the best performing stocks in the US over the last couple of months, we have identified in that edition. And if you're not investing in the US yet, you really should be. So head to www.thinkmarkets.com/au/webinars to register for those. If you're not a client of ThinkMarkets, well, you really should be, because we are the good guys in the Australian broking scene. Because not only can you trade plain old-fashioned vanilla shares with us at $8 a flat rate, chair sponsored, but we do have the ability to trade all the good stuff that we talked about today: the macro, FX, indices, commodities, futures, crypto, and shares. Most of the things, I can't say all the things, like you can't trade Newcastle coal. Okay, you can't pretty much can't trade that with anyone unless you have a proper futures broking account. And you're looking at thousands and thousands of dollars worth of margins required there. But most of the stuff we talked about today, you can trade with us. Market leading spreads, commission-free shares, the best platforms, and the best customer service. If you're watching me on any of the streaming services, please hit the subscribe button to stay notified of any of my future updates. And of course, hit the like button to let me know you like what I'm doing, so I'll continue to do more of it. It has been a pleasure chatting with you today. All the best for your investing. Until we catch up again, bye-bye for now. But don't forget, the disclaimer says that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general advice, please consider it carefully or seek the help of a financial professional. You can learn more about ThinkMarkets or our products by heading to the website and downloading our PDS.